This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us by the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on October the 2nd, 2015. Our time is 8:46 Mountain. Radio show runs on 6:30 CHED in Edmonton, Sundays at 3. If you ever miss a radio show, we have a podcast through iTunes. Type in The World Financial Report on Radio. You'll find us there. You can subscribe to the podcast. We go on any of your portable devices. Anywhere you go, the radio show is there with you. We also have the shows archived and streaming live on Harold's two websites, HESradio.com and rarecoloreddiamonds.com. It was a very interesting week. And before we get to some of the news and then Harold's commentary, our featured diamond of the week is another rare diamond from rarecoloreddiamonds.com. It's a .18 carat round brilliant cut, fancy vivid yellow green. It is absolutely amazing. This diamond, I have never seen a color of a diamond like this before. It is so beautiful. Museum quality. We'll talk more about it later in the show, but it's a .18 carat round brilliant cut, fancy vivid yellow green. See it at rarecoloreddiamonds.com, featured diamond of the week. In the news, as we tape on a Friday morning, jobs numbers out of the United States, and they were not good. Does not surprise us. 142,000 jobs were added in September. The unemployment rate in the U.S. stayed at 5.1%. They had expected around 200,000 jobs to be added. In August, they revised the number lower to 136,000. In the third quarter, which is now just over, it was a very volatile quarter and a lot of money was lost on stocks. The Qatar Fund lost $5.9 billion with a B, on VW due to their scandal and Glencore Holdings. Now, Glencore has bounced back, but the Qatar Fund down $5.9 billion. Also, we all know about GoPro. They have those cameras. The company was founded by Nick Woodman. His net worth is down by $1.4 billion due to the pullback in GoPro shares. Carl Icahn came out this week, warned about the red-hot stock market. It's being supported by an unsustainable earnings mirage. He did a 15-minute video and listed off all his major concerns. But Carl Icahn, a legendary Wall Street figure, very, very concerned about the stock market. Credit Suisse coming out and saying the stock market on the verge of a major top. Saudi Arabia withdrew $70 billion from global asset managers. The reason? Budget deficit concerns in Saudi Arabia. The oil price down. They have budgets to meet. They don't have the money coming in due to the oil price. They dipped in and pulled out $70 billion from global asset managers. In geopolitical news, Russia started bombing in Syria this week. Hurricane Joaquin is threatening the United States, the east coast of the United States, and elections in Portugal this weekend. But our featured diamond of the week is an absolutely stunning diamond, a .18 carat round brilliant cut, fancy vivid yellow green. And it's at rarecoloreddiamonds.com, featured diamond of the week. You can see a picture of it there. And Harold, we should say off the top of the show, happy anniversary to you and your wife, Harriet. 33 years married, and I know your wife is just an amazing lady. And congratulations on 33 years.
Thank you, my friend. You know, it's amazing because when I came down from Canada 34 years ago, actually, I was at the beach. I met this beautiful woman. I introduced myself as Harold Siegel, and she sort of laughed. I said, "What's so funny?" And she goes, "That's my father's name." And we got married 2 weeks later. So we've been married 33 years, got 2 phenomenal sons, 4 grandkids, and again, I'm very blessed to have such a beautiful family. So thank you very, very much, Randy, and thank you for all our listeners, for all the good wishes during the week. I really appreciate it. Crazy markets, obviously today with the which we're taping the show on Friday, with the bad job numbers coming out of the U.S., gold is up $25. It's $11.39. In actual fact, we are back down to very close to $1,100 during the week. So this is basically just short covering. Silver's up 59 cents. It was down to as low as $14.32. In fact, gold was at 11.04 this morning, and now we're trading at 11.42. This is not a change in the direction of gold and silver. What we will see is still a continuation of the downward trend in gold and silver as the U.S. dollar will continue to get stronger and stronger. Unfortunately, the Canadian dollar is going to continue to lose strength. Again, I'm probably looking for a much lower Canadian dollar than most other analysts, and in no way, shape, or form am I negative on Canada. I'm Canadian by birth, proud to be Canadian, still a Toronto Blue Jays fan and Maple Leafs fan and everything Canadian, but the facts are the fact, and the US and the Canadian dollar is directly tied in to oil and commodity prices. And at this particular point, oil looks like it's going to continue to go lower over the short to medium term because we are expecting that Iran is going to start to ship and pump oil very, very soon in an already saturated marketplace. Again, we think that the downside for oil is extreme. I have a lot of great clients and friends in Alberta, and again, my heart is hurting for them because I know how hard they're struggling at this particular point, but things will get better. Unfortunately, over the short term, we do see that oil is going to go lower, which is going to push gold also lower. And also what's going to push lower is the strength of the U.S. dollar. So at this particular point, the U.S. dollar is weaker today by about 80 points, but it's still trading at 95.36. The important number for the U.S. dollar is par, because when it hits par, which is about 5 cents from here, there are several buy orders, massive buy orders above that as soon as the U.S. dollar breaks that par level, the U.S. dollar should skyrocket. My opinion is that the U.S. dollar is going to go to 107 to 109, which where it was back in the 90s when the U.S. dollar was basically the second strongest currency just behind the British pound. So at this particular point, the only currencies that are stronger than the U.S. dollar are the British pound, the Swiss franc, and the euro. All other currencies are way below the U.S. dollar, and it's not that I feel that things are so strong in the United States that their dollar is reflective of that. What is happening in the United States is that the economy is better than almost every other economy around the world. So right now, the U.S. dollar is the area that you want to have your money invested in. Anything to do with the U.S. Now, I'm not saying stocks. I'm saying to have some money in U.S. dollars. Now, this should have happened a long, long time ago. We've been saying this for quite a long time, that the Canadian dollar was going to continue to fall and probably fall down to around the 60-cent level, which I know is going to devastate the economy in Canada. A weak U.S. dollar, Canadian dollar like that basically means that right now, that if you were to go to the United States and want to cash in $1,000 or buy $1,000 worth of U.S. dollars, it would cost you $1,321 in order to do that. That's how you know that the Canadian is much weaker than the U.S. dollar. It would cost you $1,321 in order to buy $1,000 worth of U.S. dollars at this point. It was only a couple of years ago that the Canadian dollar was stronger than the U.S. dollar, and it was almost, a totally different scenario. So as oil goes lower, so does the Canadian dollar, and because we do believe that the oil market is going to fall, primarily because Iran and other countries will be shipping oil and pumping oil to get back some cash. Even though they're going to be losing money on the oil that they pump, right now it's about getting some cash and getting back into business, and that's basically what's going on. So right now, gold is trading in a range. We saw it hit 11.04 this morning, and now it's trading at 11.39. But again, it's trading in a range at this particular point. The range is at 1180 to 1080. So that's where the range is in the market at this point in gold. Now, once we break through 1080, which we were at a few weeks ago, I'm very, very confident the gold is going to drop to $1,000. So at this particular point, and use that information as very strong recommendation, because if you're leveraged in gold or silver, if you are financed in gold and silver, you shouldn't be. right at this particular point, we're going to see a very volatile market. We are going to eventually see gold drop to 1,000 to 950 in that area, and that would bring silver down to around the 1150 to 1250 level. However, we are also going to see a massive increase in the price of gold and silver when the time is right for that to happen. So we need to see this market bottom out, and we're pretty sure that that will happen very close to the end of this year. And then we'll let you know what the game plan is for buying physical gold and silver. Don't buy gold and silver that somebody else is holding. Don't finance it. Don't leverage it. And if you are in that situation right now, you may want to call me, and I'll explain to you what your options are and what you should be doing. We've got tremendous opportunity here. Again, the markets are crazy. The markets are volatile. They're speculative. You do not want to leverage. You do not want to finance. You want to own your physical metals and diamonds outright. Never, ever let somebody else hold that for you. So at this particular point, again, we're trading in a range in gold and silver. We do see more downside because of the strength of the U.S. dollar coming and everything else. By the way, this month, the loonie has hit an 11-year low. And this is something that on every single show for the last several months, probably for the last 6-7 months, we've been saying that the Canadian dollar was going to fall. Those of our clients that got out of Canadian dollars and bought U.S. dollars over the last couple of years are up about 30% and soon going to be up 50%. So, again, give me a call. I'll be more than happy to sit down with you over the phone and explain to you what your options are and how you can get out of a bad situation and into a very bullish situation in certain markets. The second half of the show, when we talk about diamonds, it's going to be one of the most exciting shows we've ever had. As Randy mentioned, the featured diamond this week is one of the rarest diamonds in the world. It's a vivid yellow-green diamond. Most people in the world have never, ever seen a diamond like this, and this is a diamond that we cut ourselves. This is such an exciting new part of our business that, again, I just want to bring you up to date on it. And, again, when you see the featured diamond this week, even though it's a small diamond, it's a one-of-a-kind. I've never in my entire career seen the vivid yellow-green diamond that's round, and especially one that is as beautiful as this one. So, again, Randy, there's a lot of things happening in the world right now. By the way, the Dow is down to below 16,000 for the first time in a long, long time. Don't forget the Dow is at 18,500. It's at 16,000 going into the 15,000 range at this point, but it's still nowhere near where it should be on the downside. In my opinion, the Dow should be sitting at about 9,000 or 10,000. The economy in the United States is not great, and that was demonstrated today by the unemployment numbers that came out, which were way below what they were looking for. They were very bullish on the employment numbers coming out today, and it was a true disappointment, which is why gold is up $25 and silver is up 60 cents. However, that is not going to last. The market is going to sell back off. And by the way, if you're sitting in the TSX, the Toronto Stock Exchange, you're down another 142 points. We've been saying to get out of that market for a long time now, and again, it's down 142 points at 13,099. There is no doubt that the Toronto Stock Exchange and the Dow is going substantially lower. If that's where you have your money invested, you're in big trouble, and you shouldn't be in that market. We have other markets at this point that could help you tremendously. Not only keep the money that you have, but make an awful lot of money. And again, I'm certainly willing to sit down. Doesn't matter how much money you have. Most of my clients are not Warren Buffetts. Most of my clients are hardworking, everyday families that need a break. They need to know, they need information as to what they can possibly do to get into a positive cash flow situation. And I have those opportunities available for you. So give me a call. I'll spend as much time as you need. And again, the total goal of us speaking together is to get you back to financial health, because in the markets that we're in right now, you have no shot doing that if you don't know what's happening in these markets. So, again, Randy, we're looking at a lot of volatility in the markets, a lot of risk in the markets, and we want to take that away. We want to put our clients into markets that they're going to not see the risk, but still see tremendous returns, and that is possible in today's marketplace.
Speak with Harold personally, privately, 1-800-432-1022. 1-800-432-1022. Connect with Harold at rarecoloreddiamonds.com. rarecoloreddiamonds.com, 1-800-432-1022. Get our free weekly newsletter from Herald. In our newsletter, we have our charts of the week, quotes, and quick hits. In charts of the week, we have the top winners and losers in currencies in the third quarter. And at the top on the winner list was the Japanese yen. At the bottom, the Brazilian real. And if you look at the Canadian dollar, in the quarter, we were down about 6.85% for the quarter. Get our free weekly newsletter from Herald, rarecoloreddiamonds.com, 1-800-432-1022. And our featured diamond of the week from rarecoloreddiamonds.com, as Herald was touching on it, just an amazing, spectacular, stunning diamond. Museum piece. The diamond is a 1.8 carat round, brilliant cut, fancy, vivid yellow green. You can see it at rarecoloreddiamonds.com, featured diamond of the week. Now, one of the quotes that we have from our free weekly newsletter is from John Embry of Sprout Asset Management. And I thought what he summarized was very strong. He said, "I'm appalled at the Volkswagen scandal. I think it demonstrates the depth of the corruption that has permeated the global system. Then I read that the departing CEO of Volkswagen is leaving with a massive pension settlement. In my opinion, he should be leaving in handcuffs. I see that the House Speaker is resigning in the United States. This is an extremely negative development with everything else that is happening on the U.S. scene. What the U.S. does not need currently is the threat of a government shutdown, and obviously that was averted during the week. The idea of balanced budgets and hard spending limits is an idea whose time has passed. If the United States goes down that path at this time, a depression in the United States would be guaranteed. These are perilous times, despite the fact that many people refuse to acknowledge that reality. There's extreme risk in holding paper assets, and investors must balance their portfolio with more exposure to real assets, the cheapest of which are gold and silver." And we touched on it off the top of the show. One of the major stories of the week, Carl Icahn warns the red-hot stock market is being supported by an unsustainable earnings mirage. Icahn warns the trouble is coming to the financial markets in a new video titled "Danger Ahead." Now, we have two stories on what Icahn had to say, and we have the video. We have a link of the video. Click on the link in our free weekly newsletter. You will see the video "Danger Ahead." And Icahn, the billionaire Wall Street veteran, lays out the major problems coming for both Washington and Wall Street. And he's saying that very dangerous and could be disastrous, some of the things that are happening. And he offers a very straightforward and chilling summary of what he believes to be an unsustainable and fragile set of circumstances that are propping up the stock market. And in the end, we're left wondering whether we could repeat what we saw during the financial crisis or worse. So get our free weekly newsletter from Herald, connect with him, and obviously speak with him personally and privately about investing in hard assets. Speak with Harold at rarecoloreddiamonds.com, rarecoloreddiamonds.com, or call 1-800-432-1022. Another person very concerned about the stock market is Bill Gross, legendary bond fund manager. He's laughing at the stock market. In a tweet on Tuesday, Janus Capital's Bill Gross said, "Stock market refrain from a few months ago. Where else are you gonna put your money? LOL. Ever consider cash?" Put another way, Gross is laughing at people who invest in the stock market because there is nothing else to invest in. Folks who have been reading Bill Gross's investment updates over the past year or so most likely know that Gross would prefer holding cash to being invested in the stock market or almost anything else. Early in September, Gross, in his monthly missive, basically said everything sucked. Global fiscal and monetary policy is not now constructive nor growth-enhancing, nor is it likely to be. If that be the case, then equity market capital gains and future returns are likely to be limited, if not downward sloping. high-quality global bond markets offer little reward relative to duration risk. Private equity and hedge fund relative returns cannot long prosper if global growth remains anemic. Cash, or better yet, near cash, and he's talking about 1 to 2 year corporate bonds, are my best idea of appropriate risk-reward investments. The reward is not much, but as Will Rogers once said during the Great Depression, I'm not so much concerned about the return on my money as the return of my money. And Credit Suisse coming out and saying that the stock market is on the verge of establishing a major top. David Stenton and his team at Credit Suisse think the S&P is at risk of forming a major top, and they were using technical analysis. Harold, one of the overriding features in the newsletter this week is the warnings about the stock market. That seemed to be one of the major concerns that we were hearing this week out of the information flow. Everyone saying, be very, very wary of the stock market. We have about 2 minutes left here in our segment.
Well, I'm not a fan of the stock market. I think it's manipulated and all that type of thing. And because it is manipulated, I do not believe in this type of market situation that we're going to see much more of a sell-off in the Dow than we've seen already. Again, I believe that the Dow should be sitting at 9,000 to 10,000, but it's not. It's sitting at 16,000 at this point. Even though we have seen a high of 18.5, I do believe, because the U.S. is the strongest economy, even though it's got its issues, I do believe that we're going to see a major rally in the Dow, especially if they do not cut interest rates, which I do not see them doing in any way, shape, or form. So, again, at this point here, I would not invest in stocks. I would definitely not be in the TSX at this point here because, again, it's such a commodity-based market type of thing, and I just don't see any bullishness happening at that particular point. So I would not be sitting in stocks in the TSX. As far as the Dow goes, I'm not buying anything. I haven't been in the Dow for almost 15 years now. So it's just not the type of market that I believe that we should be in. It's way too speculative, and that's not what that market is supposed to be about. So again, at this point, I'm very comfortable holding on to hard assets, mostly diamonds, physical gold. Even though I do believe gold's going lower short term, I do believe that we don't need to trade gold or silver. We need to hold it because there is going to be repercussions from all the printed money and everything in the derivatives market. And one of these days, within the foreseeable near future, we are going to see gold trading anywhere from $2,000 to $3,000 to $5,000. So, again, we're going to try to pick the gold market as close to the bottom as possible, but I do believe we are going to see a massive rally moving forward as the conditions start to change and deteriorate.
Our featured diamond of the week from rarecoloreddiamonds.com, a 0.18 carat round brilliant cut, fancy vivid yellow green. You can see it at rarecoloreddiamonds.com, featured diamond of the week. Connect with Harold, rarecoloreddiamonds.com, or call 1-800-432-1022. I'm going to come back and talk more about diamonds as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on October 2nd, 2015. Our time is 9/11 Mountain. And next weekend, a long weekend for Canadian Thanksgiving. We're all excited about that. If you ever miss a radio show, they are archived on Harold's two websites, HESradio.com, rarecoloreddiamonds.com. They're streaming, they're live. You can listen to them anytime. If you miss a radio show, we have a podcast through iTunes. Type in The World Financial Report on Radio. You can find us there. We go on your portable device anywhere you do. Connect with Harold at rarecoloreddiamonds.com. 1-800-432-1022. Harold has a very generous offer to you. You can call him, and he'll be happy to speak with you at any time. And he'll explain the ins and outs of the hard asset market and why you need to have an allocation of hard assets in your portfolio at all times. And with what's happening in the world today, with obviously a lot of chaos financially and geopolitically, now is the time to speak with Harold to make sense of what's going on. 1-800-432-1022. rarecoloreddiamonds.com. And our featured diamond of the week is a .18 carat round, brilliant cut, fancy, vivid yellow green. When Harold sent me the picture of this diamond, one of the things that caught my attention was how vibrant it was, how the green was so vibrant and really stood out. And Harold, this is like a museum piece. This is one of those diamonds that, it's absolutely stunning for its color, and the mixture of the vivid yellow green together is a must-see, must-investment.
You better believe it. And this is a diamond that we cut ourselves. So this is a diamond that we bought from rough, cut it. It's in GIA right now, and even though it hasn't been graded, when they did look at the diamond, and they almost fell off their chair, they did say that it's going to be graded as a vivid yellow-green. So, again, this is what diamonds are all about. This is, when you look at this diamond, all you see is the most beautiful sight that you could possibly imagine. To get a vivid green diamond or a vivid yellow, they just don't exist. They're the rarest of the rare. So I just wanted to show everybody what we do. This is a diamond that we mined, that we cut and polished, and that we sent to GIA to be graded. And I just wanted you to see how magnificent this diamond is. And again, these are the type of diamonds that will make our clients tremendous returns on their money. So this is an asset that I urge you to look at and to consider, because again, this is a one-of-a-kind diamond. And the other thing is that I've traded commodities for over half of my life. At one point, I owned the largest commodity brokerage firm in North America. I had over 200 brokers, and I had 7 offices throughout Canada and the United States. And basically, I know the markets. I've traded markets extremely well over my career. The fact is, to be able to be in an investment like this that has no risk to it is just an unbelievable opportunity. And the point that I'm making about trading commodities is that one of the major markets that I've always traded was the currency market. And there's a massive change in the currency markets between the U.S. and Canadian dollars. And what I've been saying to my clients to get out of Canadian and into American-denominated investments, diamonds are one of the major factors that I'm speaking about. Because my Canadian clients that bought diamonds, even a couple years ago when the Canadian and American dollars were even, they're up 30% just on the currency alone. So I've been hedging the Canadian-American dollar because, again, being Canadian and being that most of my clients are in Canada, I don't want my clients to get hurt. So we've been hedging the Canadian-American dollar, and the result of that is going to be, and is, that our Canadian clients can now buy our diamonds that were always priced in U.S. dollars. You can now buy them in Canadian dollars. So that means that you're going to be making 30% immediately. Because, for example, if you bought a diamond for, let's say, $100,000 U.S., you would have to convert 130,000 Canadian in order for that to happen. Now what we're going to make happen is that you can actually buy that $100,000 U.S. diamond, and instead of spending 130,000 Canadian, you're only going to spend 100,000 Canadian. So I just use that as an example. It's the same on a $20,000 or a $50,000 or a $2 million diamond. We've hedged the market correctly. We made a lot of money hedging the Canadian-U.S. dollar spread, and rather than put that in our own pocket, we're turning it over to our clients. So as soon as you buy a diamond from us, you're going to be in profits by 30% the second you buy that diamond. And that's what we bring to the table. That's what we want for our clients to be able to invest in, something that you're not going to lose your money, something that's going to give you tremendous opportunity to make money moving forward. And again, it's a U.S.-based investment, so when we do sell it, we will sell it in American dollars. This is how exciting this is. When you see this diamond today, the featured diamond of the week, your eyes are going to pop out of your head. It is a vivid yellow-green diamond, the likes that most people have never, ever seen in their lifetime, even people that have been in the diamond business for a long time. I can assure you that very, very few jewelers have ever seen a diamond that compares to this, and this is a diamond that we not only mined ourselves, but we cut, polished, sent it to GIA to be graded, and are going to deliver it to a client and let them pay in Canadian dollars. That's what we're bringing to the table for our clients to get through these difficult times and make a tremendous amount of money with us. The other thing that I want to talk to you about, which is extremely exciting, is the fact that we have been in the mining business for 3 generations, going on 4 now. So the fact is that in most cases, we mine and cut and polish our own diamonds. So we've got parcels of the most amazing greens and orange and blue and pink diamonds, the likes that most people have never, ever seen in their lifetime. We cut and polish these diamonds, and the smaller diamonds we are going to make available to our clients through our website. So some of the most exciting things in the world are happening in the diamond market right now, and I can very proudly say that most of them are happening as a result of my company. So my company is not just rare colored diamonds. My company is Rare Colored Diamonds. My company is 8 Seagull Fine Auctions. My company is Diamante Atelier, where we have over 5,000 museum-quality pieces of the finest diamond jewelry you've ever seen in your lifetime, along with collections from Elizabeth Taylor and the circa 1930 Van Cleef and Arpels collection. Nobody in the world has that but me. Then on top of that, we own 8 Seagull Fine Auctions, which is the only secondary market in existence that resells our clients high-end collectibles and diamonds. And now we have our mining company, Natural Diamonds, and our mining company. In actual fact, we just bought, it was just graded on September the 17th, 2015. I've got the GIA report here. I just don't have the picture for you yet. It's a 1/4 carat. It's an argyle, and we have never, ever seen this diamond color ever before, nor has Argyle. In fact, when Argyle called us, it was as a result of this one diamond. The color is a fancy grayish, greenish blue, round, near flawless VVS2 Argyle diamond. So Argyles are not only pink. Argyle's the odd time a very rare and crazy color comes out of the marketplace, and that's what we have. It's a numbered piece. It's got an inscription, Argyle 343585. It's a round brilliant. It is a VVS2 1/4 carat fancy grayish, greenish blue Argyle. You have never in your life, nor has anybody at Argyle, ever seen a diamond this color. So this is the type of thing that we're bringing to the table now. Those who want to see this privately, I will send you the GIA report if you contact us, but I can assure you that this diamond will not be here after next week. So, again, this is another diamond that is so ridiculously valuable, and I am willing to sell in Canadian dollars because we hedged the Canadian-American dollar spread, and we made a ton of money on it. And again, what we decided to do was to make this available to our Canadian clients so they can get back into action and get into these amazing diamonds, and you'll be up 30% as soon as you buy the diamond. So, again, we're just ecstatic about the featured diamond, about this new Argyle, about our new orange and green diamonds that are so ridiculously rare, everybody, that I can't wait to show them to you. They're being cut and polished at this particular point. So, again, those that are interested in making a lot of money in the markets, this is the way to go. Very rare diamonds that are going to be paid for in Canadian dollars, and you'll be up 30% as soon as you buy it. So that's what's going on in diamonds right now, Randy. I'm just absolutely ecstatic with what we're bringing to the table right now.
Really encourage people to take a look at rarecoloreddiamonds.com, featured diamond of the week. This is a diamond that the color on it is, it has little flecks of yellow. And then there's the green there as well. It's a 0.18 carat round brilliant cut fancy vivid yellow green. And it's something that you've never seen in your life before. It is absolutely amazing. Go take a look at it, rarecoloreddiamonds.com, featured diamond of the week, 0.18 carat round brilliant cut fancy vivid yellow green. And you can obviously speak with Harold at 1-800-432-1022 and ask about investing in that diamond to add to your portfolio or start a diamond portfolio. Go to rarecoloreddiamonds.com and take a look around. One of the stories that we have this week, and it was put together by Christie's, A Brief History of Blockbuster Diamonds. And they talked about the blue, fancy, vivid blue pear-shaped diamond weighing approximately 13.122 carats, and it sold for $24 million on May 14, 2014 at Christie's in Geneva. They also sold the Perfect Pink, a superb colored diamond and diamond ring, and it weighed 14.23 carats. It was sold for $23 million on November 29, 2010 at Christie's in Hong Kong. Also the orange, the largest fancy vivid orange diamond in the world, pear-shaped, approximately 14.82 carats, sold for $35.5 million on November 12, 2013 at Christie's in Geneva. They also had a white diamond, a spectacular and highly important diamond, the pear-shaped diamond weighing approximately 101.73 carats, sold for $26 million on May 15, 2013 at Christie's in Geneva. Now, we had talked about this on the last show. Set to be sold in Geneva on November 10. It is a cushion-shaped, fancy, vivid pink, is the largest of its kind ever to be auctioned, weighing in at 16.08 carats, estimated value of $28 million. You can see all those amazing diamonds. We have the story in our free weekly newsletter. There's one other diamond that we talked about, the world's priciest diamond, perhaps, a rare 12-carat blue-colored diamond known as Blue Moon, could fetch up to $55 million, November 11 in Geneva, and that is through Sotheby's. And Harold, it's something we don't talk about for privacy reasons, but your company has sold diamonds up in that territory, the big numbers. And if somebody is interested in investing in one of those monster diamonds, you have access to them.
Well, yes, we do. First of all, what a treat it is to be able to see these diamonds again, Randy. They are
it is just beautiful.
Oh my God, are they gorgeous! I got to say, I don't know which one is my favorite. I think the Perfect Pink is the most beautiful diamond ring I've ever seen. But there's no doubt that the vivid orange diamond,
I think so too. Yeah, the orange,
14.82 is my favorite of all, because orange diamonds are, in my opinion, more rare than reds.
Mm-hmm.
So to see a vivid orange diamond, $35 million, and I know what they paid for that rough when it first came out. So again, I'm familiar with the profitability of diamonds that come out of the ground once they're cut and polished and what they sell for. By the way, that 101 carat D Flawless is so magnificent, but we have a emerald cut D Flawless Type 2A diamond over 100 carats that's more in the $40 million range. This one sold back in 2013 for $26 million. But again, you're talking about a diamond the size of a golf ball. That pink masterpiece that is going to sell in Geneva is just unbelievable. And again, it's just a real treat to be able to see diamonds like this. It's great that they actually publish this, because everybody who gets the newsletter is going to see the most magnificent diamonds of all time. And again, we do have diamonds like this, but the majority of my clients are not buying multi-million-dollar diamonds. The majority of my clients buy diamonds, in the 20, 50, 100, 250, 500,000 range. These are longer-term investments. You don't buy a diamond and sell it in a year or two. You want to hold on to them. The longer you hold on to them, the more and more and more they go up in value. These diamonds never, ever lose their value. And again, if you're doing fine and you don't need the money, these are the type of assets that you pass down to the kids and grandkids, because then they take on a life of their own. You could see a diamond 50 years ago that was bought for $50,000 today is worth $5 million. There's no other marketplace in the world, aside from maybe classic cars and very fine art, that can make the returns that rare diamonds do. And that's what we've been recommending for over a decade now.
Richard Russell had a quote this week. He said, "The initial shock hasn't dawned on the public yet, but it will. The reality is the United States is sinking back into recession, and with those job numbers that we saw today, it would say that that is the case. He said, I think we have reached an inflection point, and the bad news is coming out. This obviously will terrify the Fed, which has been trying in all its might to push core inflation to the much-desired 2%. Soon, I think newspapers will start breaking the disturbing news, the fact that the U.S. has sunk back into recession after 6 years of pumping by the Fed. So what's next? The Fed raising rates is not out of the question. What's more likely is the return of QE, because the Fed is terrified of the current position in which deflation is taking over from the much-desired inflation. It would not surprise me to see QE4 established as the Fed addresses the deflationary trend. A lot of members of the Fed coming out and saying probably by the end of the year they will raise rates. Although when you see job numbers like we had today out of the States, 142,000 gained, they were expecting 200. One would think that would be a hard thing to do to raise rates. You add into the fact that really there is, according to their numbers, their statistics, not any inflation out there, you would think it would be a huge, huge concern. But Harold, it all comes back to hard assets, like our featured diamond at 1.18 carat, round, brilliant cut, fancy, vivid, yellow, green. You want hard assets in your portfolio like we have at rarecoloreddiamonds.com. Governments can't print diamonds. They cannot print gold and silver. You want to have an allocation of hard assets because, let's face it, the U.S. government could be in a position where they do have to go to more printing of money, which at that point will debase currencies even further. We're seeing debasement of currencies around the world, negative interest rates. It's a currency war, and you want to have assets that maintain their value and appreciate, and that's why we're recommending the diamond market in an environment of negative interest rates, inflation heading to deflation, and currency wars. You want a hard asset that will maintain its value. And that featured diamond will do exactly that.
You better believe it will. It is so beautiful, and I'm so excited for one of our clients to be able to own that diamond. It is spectacular. It would look amazing in a very simple, beautiful ring because, again, the color of this is vivid yellow-green, and I can guarantee you very, very, very few people in the world have ever seen a diamond like this, and we did cut this diamond ourselves. We have our own cutting facilities in New York and in Antwerp. And again, we've been in the mining business for going on 4 generations now. So know our business. These are the type of diamonds we're going to bring to you. We're going to bring to you some of the most amazing diamonds coming up over the next few months, diamonds that you don't even know could possibly exist. And this is where a lot of money is going to be made.
Well, and we touched on it earlier. GoPro, their CEO, Nick Woodman, lost $1.4 billion. And GoPro cameras, obviously, everyone loves them. But the stock is going down, in fact, down 53% in 2015. We saw what happened with Glencore during the week. And everyone was talking as if we'd never need commodities again. That's how silly the markets get at times. They were talking about Glencore maybe going the stock to zero because, well, we're never going to need commodities anymore, which is absolutely absurd. But you can see the madness of the crowds and the fact that you do not want to get caught up in it. But it's interesting to note that the Glencore chief executive, Ivan Glasenberg, he lost $500 million in one day on Glencore stock. Now, it did bounce back a little later in the week. But you can see, Harold, we're constantly being told that hard assets are a risky place to be. But you hear these numbers like the Qatar Fund losing $5.9 billion on VW and Glencore stock. And at the end of the day, if you have a hard asset, it's something that you can hold in your hands. And really all you have with VW stock and Glencore stock is paper. And we will take the hard asset any day of the week.
You better believe it, Randy. Again, paper is paper. Paper is manipulated. Paper can go to zero. You'll never see gold and you'll never see diamonds ever do what stocks do because they don't have that same value to it again. So at this point, we're recommending to be conservative, to not take any risks. if you can get out of the TSX and the Dow, I just don't see where that's going to make anybody money, and the risk is worth way more than the reward is, and look to be conservative. Give me a call and let me know what your situation is, and I'll give you my best recommendations to try to help you. And again, one of the most important things right now is to get something into U.S. dollars, because we are going to see, in my opinion, a big drop in the Canadian dollar and a massive rally in the U.S. dollar moving forward. We want to make sure that we make the money, not pay the money.
One of the stories that we have been following, and Harold, we have about 4 minutes left in our show here, is Puerto Rico. And they are going to be testifying before Congress in the United States about obviously being allowed to go bankrupt or the United States stepping in and saving them. Puerto Rico has a $72 billion debt. But there's another thing that has come out this week, a financial threat to the Caribbean island, and that is government workers' pensions. They're set to go broke in 5 years. The Governor Padilla is preparing a push for bondholders to renegotiate debts he says the Commonwealth can't afford. He's also contending with an estimated $30 billion shortfall in the employees' retirement system. And the pension covers about 120,000 employees as of June 2014 and has just about 0.7% of the assets needed to pay all the benefits that have been promised, an unheard of level among U.S. states. And we do know, and we had this in our free weekly newsletter a few weeks ago, states in the United States are on the hook for $1 trillion in unfunded liabilities in pensions. Harold, with about 3 minutes left here, there are ticking time bombs out there in the financial market. And this is why we believe in hard assets. It's a lifeline. It's a safety net. It's an insurance policy in your portfolio, because there are landmines out there that are being discovered every day, as is the case with Puerto Rico. And they're bankrupt as it is. And now suddenly, we only have, $30 billion. We need $30 billion. So here you are, you need $100 billion all of a sudden. And how many other states are in the same position and we do not even know anything about it?
Well, I'm sure several. So again, at this point here, one of the biggest concerns, and we've talked about this a lot over the last couple of years, is derivatives. That's one thing that most people don't even consider, but it is one situation that could bring down the whole world market, because you're talking about an unregulated market in the quadrillions of dollars. So again, you're right, Randy. There are landmines out there that could explode at any time. We don't want any part of that. We don't want to be in any of those markets. We don't want to wake up in the morning one day and find out that we're wiped out. That's why we don't do what everybody else does. We do the exact opposite. And so far in my career, that has worked out extremely well. So again, be conservative. Don't take unnecessary risks. Get out of bad investments. Your first loss is your best loss. And then let's talk about how to get some of your investments into the right areas to where you're going to do well and make money in a very difficult time.
Speak with Harold about getting our free weekly newsletter. Connect with him at rarecoloreddiamonds.com or call 1-800-432-1022. It's the companion to our radio show. And take a look at the diamond section, because not only do we have our featured diamond of the week, the 0.18 carat round brilliant cut fancy vivid yellow green. You can see it online at rarecoloreddiamonds.com, featured diamond. We have stories about blockbuster diamonds from Christie's. Also, beyond that, a blue diamond that could sell for $55 million and a pink diamond selling for $28 million. But more importantly, now is the time to educate yourself about investing in hard assets. And Harold, we would like to wish you and your lovely wife, Harriet, a happy anniversary weekend, and thank you for your knowledge on another great show.
Again, thank you very, very much for the good wishes, Randy, and everybody out there that has done the same. I wish everybody a wonderful weekend and a very profitable day.
If you're concerned and confused about what's going on in the world financially, geopolitically, take Harold up on his offer. Speak with him. The conversation is confidential. 1-800-432-1022 or connect with him at rarecoloreddiamonds.com. That's it. Another edition of the World Financial Report on Radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.